It feels like we're frozen for this short-term freeze
war.
over trade.
Yep.
Right. We had this trend that felt higher. I think it still does. I think we'd agree on that. But we feel frozen to some respects because we're watching these trade headlines, wondering if this phase one deal is going to happen by the end of the year. Reports yesterday suggesting it may not. Is this the way it's going to be? Pete?
I would say so. I would say we're going to continue in this whole pattern because of the fact that you were looking at phase one. We're also looking at the stuff going on with our president, with the impeachment inquiry that's on all the networks, it seems like 24 hours a day. And then just add in the rest of the geopolitical things that are going on in Hong Kong. I mean, you take your pick at what you want to say is a storyline right now, and they're all affecting us. But
if there was no headline yesterday that phase one may not happen by the end of the year,
right.
We turned sharply lower.
We were turning, yeah. We had a pretty sharp move.
I say we'd have a little bit of a different picture.
Although as sharp as that move was,
to a slight move,
right? But as sharp as that move was to the downside, let's put that into context of how big of a move that was. Yes, we were down 200 plus points, but from what area are we talking about that 200-point move? That, considering the fact that we are at highs, and we pull back 200 points.
Yeah.
It's a lot less meaningful than it would have been years ago when you pulled back the 200
Maybe
points.
We're a little overbought as well. At the same time, Meghan, your firm's increasing your risk exposure.
Yeah, so last month we did lean back in, I would say wade back into an overweight to equities. I think our base case is that I think the trade deal phase one does get done. When it gets done, I don't put as much importance on meeting that year-end deadline because I think that the December 15th tariffs are going to be punted if it's not reached by then. The important thing is not getting those next layer of tariffs on there because those would be hitting more consumer goods and we think would be more of an impact on the U.S. economy. But I think what we're seeing, the fairly constructive signaling from both the U.S. and Chinese sides, even in light of the passing in Congress of the Hong Kong Human Rights Bill, which had the potential to totally destabilize the negotiations. And arguably, if this had been earlier in the year, it may have totally thrown them off track. And they seem to be continuing in a positive direction with the Chinese negotiators inviting the U.S. to China to continue those talks. I think the market's going to continue to trade with the ebbs and flows of this headline data, but alongside of what we're seeing is kind of a stabilization of global economic data, global PMIs turning up, South Korean exports looking a little bit better, even German investor sentiment also looking better. So we're encouraged by that.
Interesting note today from Nouriel Roubini, why financial markets' new exuberance is irrational. The disconnect between financial markets and the real economy is becoming more pronounced, he says. Is that fair? I mean, we've pushed these new highs. We continue to hit new highs. Q4 GDP is going to be weak, pretty weak.
It's the same story.
Is this irrational?
Scott, it's been the same way for the last 10 years. You can make that argument for 10 years. We haven't seen any significant growth acceleration in the last 10 years. At best, we do 2.5%. And then we fall back 1.5%, 2% economy, and we have the Federal Reserve giving us the liquidity underneath the market. So I disagree with that. I just don't see it as pronounced. I see it as a sea of liquidity in an environment where you're getting cash plus a toaster. And in a cash plus a toaster world, you got to find some assets to be invested in.
Yeah, the market generally looks through and looks ahead of economic data. It's not going to wait for that economic data to start to turn. And arguably, when the data is soft and moving higher is the best time to be buying stocks.